Jerome Powell killed the reputation of the US Federal Reserve. The US Federal Reserve used to be a beacon, an inspiration for all central banks around the world. It was a textbook example of how a central bank should be, and now it's dead. On December 13, Jerome Powell said one sentence, and that sentence spells trouble for the US economy. What Jerome Powell said on December 13 was a major change of monetary policy, and it will affect the US economy and the world economy in 2024. If you're an American or you have American stocks or bonds, his decision will affect your income, your dollars, and your life. So in this video, I'll share with you what Jerome Powell said, why he said it, and why he's destroying the reputation of the Federal Reserve. Let's look at what Jerome Powell said on December 13.
The appropriate level of the federal funds rate will be 4.6% at the end of 2024.
I know what you want to say. You probably want to say, hey, that's boring. How can such a boring statement have any impact on anything? Let me explain. In that press conference, Jerome Powell promised interest rate cuts, which goes against everything he was saying for 2 years. Because for 2 years he was repeating that the Federal Reserve will achieve low inflation, and to achieve low inflation it will keep interest rates high. And just recently, on December 1st, just a few weeks ago, he said this: "We are getting what we wanted. We are prepared to tighten policy even further if it becomes appropriate to do so. And it would be premature to speculate on when policy might ease." So he just said that it would be premature to speculate blah blah blah, and 12 days later he does this premature speculation. Just 12 days later, he does a total turnaround, about face. He does 180. But let's recall why the Fed raised its policy rate in the first place. They did it to reduce inflation, because the US was hit by high inflation during the Biden administration. So for 2 years, the Fed was raising the policy rate, and the inflation rate is now 3%, but the target is 2%. So in the US, the inflation rate is still high. It's above the target. So the Fed should keep interest rates as they are. Instead, they plan interest rate cuts, which will boost inflation and kill everything the Fed has achieved over 2 years. Just why? I see 3 possible reasons for Jerome Powell's statement. He had a fiscal reason, or an economic reason, or a political reason, and none of these reasons are good for the United States. First, the fiscal reason. The United States struggles to make interest payments on its debt. The US public debt is 33 trillion. It's the largest debt in the world, and for the United States, all-time high level. It's 123% of the GDP. This number is just staggering. And the Fed policy rate is 5.5%. So the United States struggles to pay this interest rate on this debt. This year, interest payments on the US debt hit $1 trillion. It's 2% of GDP. 2% of the US GDP is spent, wasted on interest payments. But think about what I just said. The United States, the strongest economy in the world, the greatest country in the world, can't serve its own debt. America chose this policy rate, 5.5%, and America can't handle its own interest rate.
You can't handle the truth!
If you listen to the experts, they will all tell you that this policy rate, 5.5%, is too high. It's punishingly high. No, the United States had even higher interest rates in the 90s. And it had the same rate in the early 2000s. So this rate is not high, it's normal. The US debt is too high. But maybe I am wrong. Maybe the United States is fine making interest payments. 1 trillion, 1 gazillion, there's a lot of money. In that case, Jerome Powell didn't have a fiscal reason, he had an economic reason. And the economic reason is he expects a recession. The Fed rate cuts is what a central bank does in a recession. But there is no recession yet. And politicians and Jerome Powell tell us that there is going to be no recession, that the US economy will keep growing. So, the US Federal Reserve plans to fight a recession which will not happen. So much for logic. Maybe, just maybe, Jerome Powell knows it's going to be a recession. He knows it's going to be a severe one. So he acts now before a recession strikes. But maybe I am wrong. Maybe Jerome Powell doesn't have a fiscal reason or economic reason for interest rate cuts. But in that case, it's even worse, because Jerome Powell is going to cut the Fed rates for pure political reasons, to help Biden win the election. Now, let me make it crystal clear. I am not against Jerome Powell. I sincerely believe that Jerome Powell is a competent, educated, and experienced professional. Also, he's got no balls. He has no courage. Just look what he did in 2021 and 2019. In the year 2021, when Joe Biden took office and inflation took off, it was Jerome Powell's job to do something to reduce inflation, but he didn't. Why? Because President Biden told him not to. And before that, in the year 2019, he cut the Fed policy rate. When the US economy was not in a recession, when the economy was booming. And why did he cut the policy rate? Because President Trump told him to. So Jerome Powell doesn't act in the best interests of America. He acts in the best interests of a president of the day. What do you think? What reason is behind Jerome Powell's flip of his policy? Interest payments, an upcoming recession, or it's just Jerome Powell doing whatever Biden tells him to? Put your answer below, I'll be happy to see what you think. But whatever the reason, the result is the same. The reputation of the Federal Reserve is dead. The reputation of the Federal Reserve as an independent, competent central bank is dead. In 2024, the United States Federal Reserve will deliver what politicians and corporations want. And they want one thing, and one thing only: money. Cheap money. Because America is addicted to cheap money. So the Fed will cut interest rates, resume bond buying programs, and print a lot of dollars. Who cares about the economy or inflation? Let's just print money. And this money printing will bring high inflation in 2025. And now I am raising this glass of milk to the memory of the US Federal Reserve. It was a good central bank. It did a lot of wonderful things. It tamed inflation in the 80s. It saved the global financial system in 2008. And now it's dead. We'll never forget the US Federal Reserve. That was my take on the major flip of monetary policy. I wish you a happy new year. Stay tuned for more economic updates, and I'll talk to you next time.